Well, it was a relatively quiet day on Wall Street with the S&P 500 and Dow Jones closing essentially flat. Perhaps this is the calm before the storm of the Federal Reserve meeting that'll be taking place in the coming days. We did have a nice bounce out of the NASDAQ here today, partly due to Facebook having a stellar day in anticipation of a cryptocurrency type of an announcement they'll be making at an investor event coming up soon. We're going to take a look at some of the sector rotation information as we always do. And then I also want to get into our trade application example, which will have a bit of a coffee theme. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's June 17th, 2019. First of all, if you are new, welcome aboard, and make sure you go over to our YouTube channel, click subscribe. While you're over there, check out our description area where you'll find a link to sign up for our email distribution list. In addition to that, we're heavy users of Twitter. I would encourage you to follow me at Brandon Van Zee, and thank you to everybody who clicks like and retweet on these Market Outlook related posts. And lastly, we do have a presence on Facebook as well. We would invite you to join us at the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us for those of you that are premium members of Market Scholars. And this particular chart setup will give us kind of a four-grid view here of the four major U.S. equity indices to kind of get a sense of whether the patterns are uptrending, downtrending, or otherwise. In addition to that, you'll see at the bottom of each one of the charts a market forecast indicator, which you can find on Thinkorswim platforms from TD Ameritrade. And you can see that the background colors of the charts will change either green or pink, depending upon whether we have a bullish or a bearish posture on the various indices at that given time. As you can see right now, all of these charts currently have a green background color. Now note that this green background color in the lower left or lower right hand corner of this chart is going to show us that we do have what's known as a weekly bullish posture. Not a strongly bullish posture, but a weekly bullish posture. Now this is for the Russell 2000, so this is the small cap index here in the United States. And the reason for that is this green line, which is kind of our default posture setting line of the market forecast itself, is trending up. However, notice that it is below the 50th percentile of that particular indicator. In fact, you can read the specific number right here. It says 41.49 and rising. So we do consider it bullish, just weekly bullish, whereas the rest of these charts have this darker green background color, and that is signifying that we have a strongly bullish posture on those three indices because the green line has now crossed up and above the 50th percentile. Now you'll notice that the S&P 500 and the Dow Jones both closed up 0.09%, or as I mentioned in the intro, essentially flat. Down below here, we do have a little bit more exciting returns with the NASDAQ being up 0.62% today, and we did have the Russell 2000 also up 0.67% today. So a little bit more action there from those risk-seeking areas of the market. As I mentioned, for the NASDAQ in particular, Facebook was a big driver of returns here today. But all else being equal, we do have a fairly strong market right now from an intermediate time perspective and remain bullish. Let's go ahead and take a look at our next chart setup. This will be chart 4C. And as we look at this is our three green arrows chart setup. And three green arrows is just one way to kind of describe three different technical indicators that we use on our trend trading charts. Remember, on Mondays, I typically don't do these videos here. David usually does, but he's out of the pocket here for the next couple of days, so I filled in for him here tonight. But earlier today, I taught my top-down trend trading class. Those of you that are familiar with that style of trading, perhaps you joined me in a class or two at my previous employer before coming over here to Market Scholars, and you might recall the three green arrow philosophy. And if that is the case, then you should remember that those three green arrows are made up of the 30-day moving average, the MACD histogram, and the stochastics. And what we're trying to do on these charts is see if we've got them lined up or not around the same time. They don't have to be perfectly on the same day, but we're just looking for the last signals of each of those three indicators. And if they're green, then that gives us a sense that the market is relatively is strong for a trend trading philosophy. And so that is where we stand right now with the S&P 500. We've got that 3 green arrow set up. We've also got the 3 green arrow set up with the Dow Jones. We've got the 3 green arrow set up with the NASDAQ. And we just barely, as of today, so this is new information, got 3 green arrows as of the Russell 2000. You'll notice the reason for that is the Russell 2000 was up enough today, up 0.67%, where we closed back up above that 30-day moving average. Notice that on Friday, it was down and closed below it, so it produced that red arrow, but we got the green arrow back just one day later. And so we'll see if that takes us further or not. Of course, a lot of this rests on how the market interprets the Fed comments later on this week. But right now, reasonably strong markets to be performing some of that 3 green arrow analysis. And by the way, for those of you that want to find that on our website, if you are premium market scholars already, those recordings have already been posted. Sometimes WebEx gets those recordings to us back right away. Fortunately, today was one of those days. Other days, it seems like we have to wait sometimes until the next day to receive the recording. So sometimes it's a bit sporadic with them. But today, they got them back to me nice and quickly, and so I was able to get both the top-down trend trading room posted and also the options for long-term investors trading room posted. In the top-down trend trading class, we did cover a Midwestern gas station chain that's known for pizza, of all things, and an electric utility out in the middle of an ocean, and a real estate play in the hot cloud computing niche. So if you're interested in those that content, feel free to check out that recording. And then over in my options for long-term investors class, we did do a roll from June to July in one of the drugstore stocks that we've been trading sold puts on. And then we also evaluated a couple of new trade setups on a beverage giant and also a semiconductor company. So make sure you're taking advantage of those resources. And remember, for those of you that are premium members of Market Scholars, you might have been receiving an email here from David and I the last couple of weekends with some summaries of the things that we learned in classes earlier in the week to make it a little bit easier for you to kind of pick and choose which classes you want to attend. Now remember, tomorrow I'll be teaching my dividend growth investing class at 11 a.m. Eastern Time. Also, while we're over here on the internet, a real brief reminder that on the sector selector, this is something I do update on Friday evenings. We didn't have a whole lot of change, so I don't need to spend a lot of time on this. Real estate, utilities, and staples stayed number 1, 2, and 3, just like they were in the previous week. But we did have a couple of little upticks here and there. Technology, financials, and healthcare kind of had a little bit of an uptick, and so did materials down below. However, you will see that energy stocks kind of remain stagnant down there in the bottom slot. And then lastly, here on the market outlook related posts that we have on our blog. Remember, while you're watching these videos, you can actually click like over on Twitter if you want to help support this video and encourage us to do this on a daily basis. As I mentioned before, Mondays are very difficult for me to do this video, so I had a decision to make today. Either decide to do the video with David out of town or not to do it. You can imagine that my motivation to do the videos is much higher if you guys are liking and supporting these videos, and we get the sense that you guys are getting value out of these videos on a daily basis. Now, how do you notify us of that value? You click like on Twitter. It's as simple as that. It's a pretty good trade-off. It usually takes about 2 to 3 hours to produce these videos for you guys every single day for David and I. And so if you could just take the 5 seconds to click like on Twitter, that would go a long way in letting us know that you want us to do these every day, even when one of us is out of town. Thank you to the 94 people that clicked like last time around for me on Twitter, and I'll post tonight's video and tweet to the top of my timeline as well to make it nice and easy for you to locate. All right, back over to the charts. Let's go ahead and now take a peek here at our next chart setup, which will be our 1040 crossover method chart, and this will be chart 4D. Now, as you're looking at this particular chart setup, the only thing worth mentioning is down below here in the lower right-hand corner, that's our Russell 2000 again. That's the only one that has a pink background color on this chart setup. Now remember, this is a longer term chart that we're looking at here. These charts are 3 years in length. Each one of the candles represents 1 week, and we're looking for crossovers of the moving averages themselves. Right now, we do have a death cross here on the Russell 2000, which is why we do have that pink background color, whereas we do have green background on all the other charts, so we'd consider those charts a bit more bullish. However, there is something new to report here. As of this moment in time, we do have a little green arrow showing up down below here. In fact, let me right-click and go to maximize sell so you guys can see this a little bit better. And that green arrow is showing up because this price is now above the orange line here. So note that the background colors of the charts will only change when the moving averages themselves cross. But there are some little green and red arrows that will also show up here when price crosses above one of those moving averages, just to give you a heads up that we are starting to see a movement back in a different direction with a little bit more velocity than you might have expected. So while right now we do have a bearish kind of crossover here with the Russell 2000, we're on high alert because we've had 3 nice weeks thus far on the Russell 2000, and it is possible we could get another bullish crossover fairly soon. Now remember, we don't typically get a lot of quick crossovers on this particular style because it does not have a lot of sensitivity to it since we're using weekly candles, but we can have head fakes from time to time. So who knows, maybe this death cross that we got here 4 weeks ago was just that, a head fake, and we're going to be off to the races. Remember, it was not confirmed with the other 3 charts yet, and so I would say on the whole we remain fairly bullish there from that longer term trend perspective. Let's now take a look here at our 12 grids, and so we're going to start with chart 4E. As a reminder, on these 12 grids, this will be our intermarket analysis 12 grid. These are going to show us background color of charts, whether the chart is bullish or bearish according to the intermediate term line on the market forecast. And so notice that the VIX has a pink background, and so does the 10-year Treasury yield. Those are the only 2 up there on kind of the left-hand side. On the right-hand side, we've got the MLPs and we've got crude oil. All the rest of the charts are actually bullish. Some of them are more bullish than others. I would say that REITs have been extremely impressive. In fact, as I mentioned before, that was one of the core sectors that we evaluated for my paper money account for my class here today, looking at some REITs that were involved in a cloud computing play. There's another interesting REIT that I just kind of stumbled across here in the last month or so, IIPR, that has really been taking off here as well. Let me kind of show you that. This thing has just launched higher. It's now up 34% here in just 3 months, but a lot of that move has been made in just the last 3 weeks. This particular REIT is involved in the cannabis space of all things, and so maybe a little bit more of a growth type of a niche for a real estate investment trust there. But that one has been one of the hotter REITs that we found out there. But I would say that VNQ all by itself, remember that's going to have all different types of REITs within it, all by itself looks very, very strong right here. So that seems to be one of the hotter areas of the entire market, so stay tuned to real estate. Now keep in mind, with the Fed decision coming up here later this week, that can have either a positive or a negative impact on REITs because they are so interest rate sensitive. So things can change in a hurry, but right now, with the information that we have, REITs remain in a very, very strong trend. We do have the US dollar popping back above that moving average here, and we are now with a bullish posture again on the US dollar. Remember here a week or so ago things weren't looking so hot, but it's kind of pulled itself together and kind of stabilized and firmed up here a little bit on the dollar. Gold remains reasonably strong. It was down a touch here today, but it still remains near 3-month highs there. And then ag commodities also look pretty interesting. In fact, almost looks like a kind of an inverted head and shoulders pattern here over the last 3 months there on ag commodities, with this being the left shoulder, this being the head, and this being the right shoulder. Now it's not perfect. It's a little bit more of an extended head there, but nonetheless, it kind of gives you that indication that it's trying to put in a little bit of a reversal here from some of the price action that we had seen several weeks back. You can see that foreign bonds, U.S. government bonds also remain quite strong here in the middle of this grouping. Moving right along now to our next 12 grid, we'll take a look here at foreign stock markets, and this is chart 4F. And so, as you can see, things aren't looking as strong over in the foreign markets. Now, part of that is likely due to what's been going on with the dollar. I mentioned the dollar has gone up here the last few sessions, now has a bullish posture. So remember, when the dollar is strong, we do start to see some weakness in the foreign markets. I have a feeling dividends are affecting these as well. The reason I say that is you'll notice down below here, Germany, it's showing a 0.08% move, but this is a really big gap down right here. So I have a feeling today may have been X date for some of those big foreign ETFs. Let me just quickly double check something here. Over on EWG, indeed, that is the case. You can see up here, I'm on the trade tab on Thinkorswim, and I've kind of, if this isn't automatically pulled down for you, right below where it says underline, after you pull up the ticker symbol, there's another arrow that's usually pointed right. If you click that again to point down, you'll then be able to see the X dates for various securities. And so a lot of these foreign ETFs did have their X date today. So remember, while the charts look pretty bad there's a big drop off right there in Germany. There's a big drop off right there in the United Kingdom. There's a big drop off right there in Australia. That looks bad, with the naked eye, but from a realistic perspective, they were less than 1% moves, because really what was taking place is money was being extracted out of the price per share and was being paid to the shareholders that were due that money. So if you held these securities in a real money account, you would receive a cash payment as a major chunk of that drop off right there. So I have a feeling things are looking a little bit worse here today on the charts for an artificial reason, like a dividend payment there. You will see that Russia looks extremely strong here. It's been a one-way trip to the upside right there on RSX for Russia. That's security is up 7.5% here over the last 3 months. That appears to be our strongest chart on the board. On our next chart setup here, we're going to look at U.S. sectors, and this will be chart 4G for those of you that are premium members that are following along at home with your own charting package. So as we're reviewing this, you will see that we've got 3 different charts on the board here in the United States that have a pink background. We have financials, technology, and industrials. Those ones all have downtrending moving averages, you'll note as well. And so not only do you have a bearish posture according to the market forecast intermediate term line, but you also have a path of least resistance probably to the downside right now as well, with those moving averages pointing kind of the wrong direction, at least if you want to be bullish on them. Whereas these charts down at the bottom, some of those charts that I mentioned on the sector selector, real estate, utilities, and staples, you'll see that those 3 charts down below actually look fairly strong. In particular, real estate just looks like it is shot out of a cannon here the last couple of days. And so XLRE is this version. Remember, I was showing you VNQ a moment ago. XLRE is a little different than VNQ because XLRE is only going to be looking at REITs that are in the S&P 500. So these would be kind of the larger cap types of REITs that we'd be looking at with this particular view. But either way you look at it, whether it's VNQ or XLRE, those are some of the strongest trends on the board out there. So that is your breakdown there from a sector perspective. Let's now go ahead and get into our trade application example. There's actually a couple of things that I've been meaning to do. One of them is to do a little bit of maintenance on our Starbucks position. Now, for those of you that haven't been following along, let me catch everybody up to speed here. Let me come on over here to chart 4A, and let me see if I can pull up Starbucks. Yeah, there we go. And let me kind of zoom out a bit more. Let's go to a 1-year weekly candle chart here. We actually talked about this in my question and answer session for my premium students on Thursday, so that's why I've got these things marked up already. But one of the students was reminding me that, hey, our long call position on Starbucks is now at a point to roll yet again. So to catch everybody up to speed, it was last year when we first got into that trade. And all of these trades have been done during this market outlook video, so they're all available for public view if you wanted to go back and watch those recordings around those times. So at that time, we got into Starbucks because it was offering nearly a 3% yield. It had really fallen out of bed. In fact, if you look at like a 3-year chart leading up to that point, we were at 3-year lows at that point. This is where we were buying calls for the very first time in this particular market outlook video here on YouTube. So it was kind of a speculative play, but it was based upon a strong value theory that this was a stock that was an accidental high yielder. It was still a stock in its growth phase, but it was just out of favor with investors for whatever reason at that time. Well, the stock got so low, when it was down here below $48, it actually had a 3% yield at that time, and it was the only time in Starbucks' history where it had a 3% dividend yield. So one of the ways that we took advantage of that, we of course bought the stock in my dividend growth investing class at Market Scholars in that paper money account, but here in this Market Outlook video, we actually bought calls as kind of a different way to express our bullish opinion on Starbucks at that time. So at that time, we could have been questioned as to why would we do a bullish trade there because the chart looked awful. Well, from a fundamental perspective, it looked pretty interesting, intriguing to me. And so we did buy some calls there. Now, we bought the calls at a 70 delta, and by this candle right here, which was around the first week of November, we ended up rolling that first set of calls because we achieved an 86 delta. So we basically sold our 86 delta calls that we had owned and then kind of rolled them by buying new calls at the 70 delta. Well, we fast forward back over here to the last week of March, and we rolled yet again. Those particular calls that we had owned, that we bought at a 70 delta, advanced to an 86 delta. And so we sold those ones. And we ended up rolling yet again by buying new calls on Starbucks that were a 70 delta at that time. And that leads us to where we're at today, because if we come back on over here to the trade tab, you'll notice that down below we have a delta of, it says 85 right now, but be aware it was at 86 here earlier today. So I'm still going to go forward with the trade idea here to help eliminate the risk I have in my current trade, and then just make sure that I'm running my maintenance on my future trade here as well. And another thing I guess I could have done, let me go over here to the monitor tab, and let me go over here to Starbucks, and let me go over to trade history. There it is. So you can kind of get the sense of these. Now remember, these trades would go in the day after I talked about them on the Market Outlook video. So if you want to kind of go back and listen to the analysis, you would go back to probably June 28th of 2018 on YouTube to find that analysis. And then the analysis when we did that first roll would have been on November 6th of 2018. And then when we did our analysis on the second roll, that would have been on March 28th of 2019. And now here tonight we're talking about our third roll. Now notice we have, more than pulled our money out of this trade. So it's kind of like a risk-free type of a trade at this point. We're playing with the house's money. In fact, we've been doing that ever since our very first roll. You'll notice that our first shot at those calls, we spent $7.50 on them, and when we sold them, you'll notice that the selling part of this roll up here, so we bought this contract here and we sold it right here, this 45 call, we sold it for $21.90. So I mean, we were already playing with the house's money, within the first roll. So this one continues to roll on, and Starbucks is a pretty strong trend even at this point. Did pull back a little bit today, but by no means has it wrecked its intermediate term uptrend quite yet. So we're going to roll one more time here today and see if we can keep our good luck rolling here today. So I'm going to come down here to our contracts that we currently hold, which are out here in the January 2020 time period. So these are the ones with 214 days left until expiration. And the contract that we own here currently is the 67.50. And remember, we bought this when it was a 70 delta. Because Starbucks' price has continued to go up, that 70 delta has now turned into basically an 85 delta right here. So what we're going to do is we're going to sell this, lock in the gains on this particular trade, which is about $700 just on this particular roll, and then we're going to continue this by going to the next closest 70 delta, which in this particular case is the 77.50. Notice that that particular delta is at 68. So in order to make that transaction, what I'm going to do is I'm going to come down here and where I have my quantity, I'm going to right click and I'm going to go to create rolling order, and I'm just going to choose this option that it gives me talking about a calendar spread, and then we'll adjust it as needed after we load it up. So let me click on that. That loads it up down below. The bottom line is where we're selling our current holding. The top line is what strike we're going to roll to continue this trade. And so this one we do need to adjust. I don't need to, I suppose, but I want to. So I'm going to change it to the exact same time period. So we're going to stick with the January 2020s, so that matches. But on this top line here where it says strike, I'm going to click that drop down and I'm going to go to the 77.50. Again, the reason I'm doing that is because as we look at this over here, this strike chain, the 77.50 is the one that has the closest to the 70 delta. Now notice what's happening here. I'm being paid a credit of $7.86 in order to transact this trade because I'm basically eliminating part of my risk and locking in losses on this trade and buying something that's cheaper than what I'm selling, and therefore I'm receiving a credit for that. And so I'll go ahead and actually, let's just change this to a good till canceled just in case it doesn't get filled tomorrow. And then I'll click confirm and send. Review that again. Everything looks good there. We'll send that one off and we can see if we can get filled on that tomorrow. Hopefully make that roll. Now, along the same lines of kind of the conversation about coffee, another thing that I did notice here today, let's go back over to the charts and let's go over here to a 3-month chart. I want to pull up Starbucks' biggest competitor in China, and this is Luckin Coffee. Now, this is a much more speculative company. Starbucks is a well-entrenched player. It's been around for decades, highly profitable organization. Luckin is not. It's the opposite of that. It is a hyper-growth company that is focusing exclusively on China, that hasn't made a cent of profit. From what I understand, they're effectively giving away coffee for all intents and purposes. But what they're trying to do is they're trying to, grow at breakneck speed in order to have more stores in China than Starbucks. Now, who knows whether that philosophy is going to work or not. As I mentioned before, this stock is much more speculative than Starbucks, so it would not be for the faint of heart. This stock just did an IPO here back on it looks like it was May 17th. Again, the ticker symbol is LK and the company's name is Luckin Coffee. Now, one thing that stood out to me today is this stock was up 10% today. Some folks were writing this stock off immediately after the IPO because they heard about what a tremendous money-losing operation they were, on the ground floor. Not necessarily the stock, but the company's operations were losing money. But all of a sudden, a lot of those IPO stocks have been capturing investor attention here recently. We've all seen what's happening with Beyond Meat and Crowd Fire, and I think we've got Slack coming later this week, and there's a lot of excitement around the IPO market. So with this stock being up 10% today, what caught my eye is this was actually the highest closing price of this stock in their history. Now, admittedly, their history is only going back 1 month, but nonetheless, I don't think a lot of people have their eyes on this stock right now because they kind of wrote it off. And the truth is, where we closed today at 21.17 is higher than where we closed on the first day it launched as an IPO because the closing price that day was $20.38 right down here in the lower portion of this candle. And then even this one, which was up higher than today's on an intraday basis, did end up closing down at this corner of this candle. And the closing price that day was $20.63. So just like that, without not a whole lot of people noticing, today was actually the highest closing price ever on Luckin Coffee. Now, this one has really high implied volatility. Now, that might scare some of you away. It might attract others. It really depends upon your mindset. But I'll show you just how far away you can get and have a reasonably confident type of a trade. So I'm going to look at the July contracts in this case. This is the monthly contracts here with 32 days left until expiration. Now, as I'm looking at this ticker symbol LK, notice over here on the put side of the equation, we've got the 15s that you could sell for 35 cents. So that would be one way to approach this for those of you that are a little bit more aggressive. Remember, when you're a put seller, you do take on a bit more risk because the stock could technically go to zero. But considering this is a $21 stock, some of you might be willing to roll the dice and say, you know what, I don't think it's going to get to $15, a whole $6 per share in just 32 days. And if you like those odds, then there's a pretty reasonable reward waiting for you there with 35 cents. Another approach that you could do is what's known as a long call spread. And I think that's what we'll do here. Now, the benefit of the long call spread is that we have more defined risk than we might from a realistic perspective when selling a put. Technically, when you're selling a put, you do have defined risk because the stock can only go to zero, but it's hard to do it on a realistic sense since most people assume the stocks that they're selling puts on are not going to go to zero within the expiration time that they're trading. But with a long call spread, we can get a better feel for what our worst case scenario is. So what we typically do with the long call spread is we take one strike that's in the money. In this case, the 20 call is in the money. And then we take one strike that's out of the money, which in this case is the 2250. And I'm going to come over here, first of all, to the 20 call. I'm going to right click. I'm going to go to buy vertical. That loads up my trade down below. Whoops, for some reason. I don't know if I accidentally clicked something wrong. Let me do that again because that came up really goofy with a couple of additional strikes there. Let me do this again. So I'm going to come over here to the 20. I'm going to right click. I'm going to go to buy vertical. I think it accidentally hit back ratio there. So this time it pulled up correctly. Notice that what's happening here is I'm buying one contract of the $20 call and I'm selling one contract of the $22.50 call. So what's happening is there is a 95-cent debit. In other words, 95 bucks would be all I'm out on this trade, and I have the potential to make, basically $2.50 minus the 95 cents entry price right there. But one of the things I liked about the trade idea is if you add $20 to 95 cents, that's of course $20.95. So that's your break-even price in a trade like this. Well, notice where the stock is trading right now. It's trading at $21.17. In other words, you got about a 20 to 25 cent head start in this trade idea if you like the bounce that's been shaping up here in the last couple of days. So let's go ahead and click confirm and send, and we'll see if that coffee stock can start working its magic there. All right, well, thank you for joining me here tonight. Again, we do have bullish postures across the board, but a lot of us are waiting to hear from the Fed here in the next few days, and so be on high alert for that perspective as well. Of course, anytime you want to tune in to the latest comings and goings of the market, we would encourage you to check us out here on YouTube, and if you do get value out of having us do these every single day as opposed to once a week, then I would encourage you to click like on Twitter. Thank you very much, and we'll see you tomorrow. Bye-bye.